Hello, everybody, and welcome. As I like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, if you've been watching the market at all, I don't think I need to tell you how crazy this has been. Look what's happened here, and I can do this way. I'll ask you to tell me. So this was March 30th, so it's been less than a month. Let me just change this over. So less than a month ago, we hit a low of right here, and since then, if you see in the bars there, in 25 days, so in about a month, the market's gone up almost 14%. That's a lot. I mean, sometimes a whole year you might get 14%. Here we got this in less than a month. So people still seem to be a bit nervous though, and the reason I say that is because look right here at the volatility. Right here, it's still pretty high, right? I mean, considering the market's been shooting up to the moon, generally when the market goes up, volatility comes crashing down. So you can see right here, it went up and look how much the volatility dropped. And then it's been inching away and then obviously the war. But for such a big move like this, volatility is still almost at the highs of the last 6 months. So even though the market is shooting up to the moon, that just means people are nervous. Doesn't mean it's going to go down, just means people are kind of nervous about this whole thing of like what's going on. But again, that doesn't mean the market's going to go down. It could go up another 20% from here. Means nothing. Just another one of these little small clues that we look at when we're trading. Volatility is still staying high, even though the market's been shooting to the moon. Should be the opposite. If we look at the NASDAQ, obviously similar story. I've got old ones here. We can remove all these. These are different levels from something else I looked at when I did my webinar. But you can see similar story. Volatility still extremely high, even though it's gone way up in the last, we'll see how far this one's gone. 20% in a month. Huge for the NASDAQ to go up 20% in a month. And if we look at the Russell, similar story from the lows to where we're at now, 17% in a month. And again, also notice volatility is still staying high. So these are all just clues. Again, doesn't mean the market's going to crash, but people are nervous even though the market is at all-time highs. So what are we going to trade this week? Well, earnings season is upon us, so I figured it'd be fun to do something different and teach you how to trade earnings. So we're going to go to Starbucks. This is earnings right here. This tells us earnings, and you can see earnings are on 428 after the market closes. So Tuesday after the market closes is when this is going to happen. So a couple rules when we talk about trading earnings. Number one is we put this trade on right before the market closes on Tuesday. The earnings are just after the close on Tuesday. We want to put this trade on in like the last 15 to 30 minutes of the market because that gives us the most accurate idea of where the price is before the market closes because we're trying to adjust our price accordingly to where it is. So we don't want to do it at the beginning of the day because things could change by the end of the day. So last 15 to 30 minutes, and the next morning when the market opens up, we take it off also in the first 15 to 30 minutes. Unless it's a complete loser, then we'll just hang on to it because there's nothing to lose. But essentially, we close it within the first 15 minutes after the market opens the next day. So we put on the last 15 to 30, close it in the first 15 to 30 and the next morning. And how do we make this trade? So if we go to the trade page, what we do is we always go with the shortest option expiration cycle available. So this is 5 days. So obviously Monday, Tuesday, Wednesday when we take this off, there'll be 3 days, 2 days left in this cycle before it expires. But that's not important to us. It's always the shortest one available. And if we look right here, you see this on this platform, it says market maker move. And what that means is this plus minus 6.5 means the market is expecting tomorrow the stock can go up or down $6.50. And this is the number we use when we do the earnings. On the day of the earnings, we want to see what the market maker move is for tomorrow and then make our trade outside of that number. So let's go here and we're just going to, for ease of math, say this is 99 bucks just so we can go up and down. Now, a quick shorthand, and I get into this way more in detail in my courses, but just for a quick, short and dandy, kind of easy number to pull off, because not everybody's platform has this market maker move. And this isn't the exact formula, but this will give you a rough idea at least when you go to do this trade if you do it on Tuesday afternoon. What we do is we sell something called the straddle. The straddle is just selling the put and the call right near where the price is. In this case, it's near 99. So if I sell this thing, it's called a straddle. You come up with this number, and if we take roughly 85% of that number, again, these are all not exacts. My courses get into the details of how to do this correctly, but at least it'll give you a rough idea. So just for ease of math, we'll take roughly 85% of $7. We'll just say it's around $6. It's less, but we always try to kind of round up to give more cushion. So it's about $6 if we were doing it tomorrow, and you can see it's not quite accurate because this is 650, and the calculation will come out as about 550. So we want to go, at least for this experiment, $6 up and down from here if we were making this trade at the end of the day on Tuesday. So $6 up would be 105, $6 down would be 93, roughly. So I've already set this up. Oh, I thought I did. Oh, because we just did that. So I'm going to do this 93 and make this $2 wide, and 105. So it's $6 up and down. Okay, so this would be our trade, assuming everything was just Tuesday afternoon, the market's about to close, and this is where we're at. And this is the market maker move. We go $6 up, sell a call, $6 down, sell a put, buy the call and the put to make this a $2 wide iron condor. Now when it comes to earnings trades, we don't have the same rules of 33 to 40 cents or 33 to 50 cents for an iron condor because it's a one-day trade. We don't have to collect as much. We're not planning on holding this thing for more than basically 12 hours. So at this point, it comes down to whatever you think you're happy with. So if this is 50 cents and you're happy with that number, because you may, if things go your way, make 30 cents overnight. But remember, there's trading costs, there's commissions on the trade, opening and closing, all that kind of stuff. So when you're doing these one-day trades, you want to at least collect enough where after you pay off the commissions, you can make some real money. And just if everything went our way, because would be Wednesday, there's still 2 more days, so you wouldn't get the full victory lap of doing like a Thursday, Friday trade when the things are going to expire. These are all things you'll learn. But if things went our way perfectly, you could probably hope to make $30 in this trade. It might go down to like 30 cents if everything went our way tomorrow, and then let's say it didn't move at all and volatility got crushed and all that fun stuff. So again, basic rules. We're going to do this just before the market closes on Tuesday afternoon. We're going to look at the market maker move, and we're going to go just to that number or higher, depending on what we can pull off. In this case, if it was like this, it's $6 either way. We go $6 up, $6 down, make a $2 wide iron condor. Probably looking to collect at least 50 cents or more, depending on what your happy place is, to make this trade viable. And we're going to close it. We're going to close it the next morning within the first 15 to 30 minutes the market opens as well. And that is how you make an earnings trade. And that is our earnings trade in Starbucks. So before we continue on, I want this concept to sink in for a minute because this is what learning to trade options actually means. It means you have no boss, you have no employees. You are essentially creating your own job. And in this new world, as everything gets harder, wouldn't it be nice to be reliant solely on yourself? My goal here is your financial freedom, and we do that by getting you to a level of expertise and confidence similar to mine. For anyone who wants clean, simple, reliable guidance, I created the Essential Income System. You get the benefit of a structured, research-backed, experienced trader like myself, and all you need to do is follow along. And no, these aren't make-believe trades. These are fully formed trades that I'm actually doing myself in real time and sending to you in real time that are ready to execute. You don't have to guess, you don't have to stress, you just plug right into a system that works. And for those interested in not just copying trades, but actually gaining the confidence to create, make, and manage your own trades, I've created the Pro Trader Academy. It's not just alerts and it's not just courses. It's a complete trading system designed to take you from beginner to intermediate to advanced to consistent. What you need is a structured system, not scattered information. The Pro Trader Academy includes the Essential Income System, but it also includes every course I've ever made, along with every course I will make in the future, plus webinars, plus potential office hours, etc. This is valued over $2,000. Now, normally the Essential Income System is $49 a month, and the Pro Trader Academy is $99 a month. But good news, because you showed up here today, you're in luck. You can get the essential income system for only $1 for the first month, or you can get the Pro Trader Academy for only $19 for the first month by going to sharpertrades.com and using either one of these coupons. So, again, go to Sharper Trades or use the attached links. Again, there's no risk. You can cancel anytime. Give them a try. Make sure they are for you. And I look forward to having you join me on your journey to financial freedom. Hope to see you there.